You drain your checking account if you wait for luck. You grow your net worth by dumping lazy friends and buying cash-flowing assets. Master these 6 habits. Friends tell the same familiar stories about wealthy individuals. Picture millionaires winning the lottery, buying crypto at launch, inheriting cash, or receiving backing. Listeners treat financial success as a random event for someone else. Investors build real wealth using a strict formula. You display your future net worth through daily choices long before you update your checking account balance. You change your bank balance last. Everyone achieves financial success in 2 distinct phases. You forge the mindset and watch digits multiply. At your desk at 11:42 on a Tuesday, you complete phase 1. Phase 1 ends and you lie back on the mattress. You place the phone screen against the mattress. Your mind projects the number $214.36 onto the inside of your eyelids. You grab the device. Staring at the banking app creates an illusion of progress, tricking your mind into feeling productive while you remain stagnant. Your thumb opens Instagram. An uninvited advertisement appears on the screen. A matte gentian blue Porsche 911 Carrera S sits in an empty parking garage, waiting for a driver. The sunlight reflects off the polished hood. The base price reads $156,200 before taxes. The options list pushes the total near $180,000. The leather seats and upgraded sound system add thousands to the final bill. You have zero interest in the vehicle. You crave the liberating sensation of purchasing expensive items without calculating the cost. Your mind drifts to Danny. You worked the loading dock with Danny for 2 years. You both unloaded heavy boxes from delivery trucks. A bad knee forced him to end his shift, and an insurance company deposited $31,000 into his account. That drop of cash exceeded any amount you both had seen land in a bank account. He placed a down payment on a lifted F-150 within 7 days. The dealership handed him the keys. He added new rims the following fortnight. Large truck tires sat above the pavement. The bank repossessed the truck by spring. Danny returned to the loading dock. He flinched at every phone vibration after that repossession. You withheld judgment at the time. You grasp his current mindset. Danny doubted his ability to generate more wealth. He spent the settlement to prove his own worth to the world. Greed had nothing to do with his purchase. Fear drove that expensive truck. You recognize the version of yourself capable of making the same mistake. The clock strikes 11:00 p.m., bringing a reality check alongside a checking balance of $214.36. Specific problems require cash. You face the rent deadline on Friday. Your debit card failed at the Trader Joe's register during your previous visit. A full grocery cart sat in front of a growing line of impatient shoppers. The shoppers checked their watches and shifted their weight. The cashier maintained a polite expression while you tapped a backup card and hoped for approval. The card reader beeped and displayed a red error message. Your spiritual beliefs provide zero help in that checkout lane. Cash payments solve that dilemma. A second issue exists beneath the groceries and the rent. You need to know if you enjoy your existence. You need to feel autonomous. You need to feel proud of the person your mirror reflection shows you. Cash provides the space to explore those personal questions. You have treated your existence as an event happening to you. You star in a show you skipped auditioning for. You work a job you stumbled into. You monitor your bank balance like a farmer watching the rain. You react to the weather and avoid changing your location. You form a new perspective in the dark space between the ceiling and your $214.36 balance. Wealth accumulation follows a system. The system relies on rules and avoids chance, magic, or inherited secrets kept by people born with an advantage. People master this system through study and application. You recall the Trader Joe's memory. You stop avoiding the embarrassment. You force yourself to look at the memory. You view the declined card as raw data and reject the idea of poor financial habits. The event provides a clear metric for a person paying attention. You keep the screen illuminated for the first time in months. You launch the calculator application. You tackle the arithmetic you avoided for months. The numbers on the screen hold no power to alter your night. Your decision to face the arithmetic alters your night. You arrive at your wooden desk at 8:15 the next morning. Your dark roast coffee cools beside your mechanical keyboard. The calculator application from last night remains open on your monitor as a persistent visual cue. The bright screen illuminates your face in the quiet corporate office. You leave the exact numbers visible while you type replies to your morning inbox. Grant from the receiving department joins you for lunch in the break room. He unwraps his standard turkey sandwich and mentions his dog walking application. The proposed platform connects local walkers to share physical routes and divide the financial earnings. He selected the name Pack Route 12 months in the past. He avoids opening a single browser tab to buy the website address. He chews his lunch while describing the complex logistics. You nod and pivot the conversation to a different topic. You ask him the specific reason for his delay. He tells you he wants the entire concept mapped before taking action. You repeated those exact words about your own delayed plans. You postponed a professional certification and a secondary income stream. You stored every concept in a digital folder named Ideas inside your phone notes application. You left those files dormant for 2 full winters, watching the timestamps age on your screen. You scroll through the outdated text entries during your daily commute. Unexecuted concepts hold zero financial value. The thoughts fail to reach an environment where people test or build them. Packroot holds no monetary value on this date. The valuation remains zero while the concept remains a digital text file. Your personal folder contains worthless files of the same nature. This realization caused you immense distress in the past. The same fact provides a distinct sense of relief in the present. You drink your second afternoon coffee and click the browser tab you avoided 3 separate times last week. The page displays a $40 online freelance bookkeeping course. You can complete the educational modules during evenings and weekends using the spreadsheet skills you apply at your day job. $40 seems like a trivial amount to debate. You understand the math. You pause despite the low cost. Spending $40 on personal development carries more perceived risk than spending $40 on random consumer goods. The secure checkout page requests your credit card information. You type the 16 digits and confirm the final payment. You complete the transaction before your mind creates another excuse. The purchase lacks fanfare. Your coworkers ignore the event. Your checking account shows a minor deduction. Buying education produces a different result than buying footwear. Leather shoes lose value the moment you leave the retail shop. The bookkeeping course funds the specific version of you that completes the work. Financial professionals discuss investment returns using complex Wall Street terminology. You viewed those conversations as irrelevant to your daily life and personal bank account during prior years. Your most profitable yield came from an 11-month period. You studied advanced spreadsheet formulas instead of copying basic data into empty cells. That specific effort secured a permanent salary increase from your manager. The extra monthly income paid for a reliable used commuter car. The subsequent promotion generated solid personal confidence in your abilities. Funding your own growth operates outside standard market definitions. You serve as both the financial investor and the underlying appreciating asset. Grant leaves his domain name unregistered when the work shift concludes. You keep your thoughts to yourself. You eat the rest of your turkey sandwich and return to your workstation to launch the first video lesson. You mention the bookkeeping class to one specific friend that evening. You lack any tangible achievements to celebrate at this stage. Speaking the words aloud anchors the commitment in physical reality. The conversation reveals the true nature of your social circle. Certain friends ask follow-up questions about the curriculum and your schedule. Other acquaintances redirect the dialogue toward their own lives and personal problems. You listen to their familiar complaints and nod in polite silence. Sign 3 requires you to audit your inner circle. 3 weeks into your course, you sit at a long table at Bella Vita. The owners strung twinkle lights across the patio of this downtown Italian restaurant. Your friends gathered here to celebrate Ashley getting engaged. She catches the patio light on her large diamond ring with every hand gesture. She makes frequent hand movements to ensure everyone sees the stone. You feel genuine happiness for her milestone. You observe a different dynamic beneath the celebratory toasts. Devin sits to your left. He spends 20 minutes detailing his reasons for driving a 2016 Civic. He placed a piece of electrical tape over the check engine light on his dashboard. He claims retail banks operate as casinos for wealthy individuals and calls the broader stock market a rigged financial system. He laughs while delivering this routine. You have heard him repeat this specific monologue at every group dinner for the past 2 years. Nicole sits across the table and discusses a duplex she purchased last month. She secured the investment property by driving through 3 separate zip codes on consecutive weekends to identify specific neighborhoods on the verge of rapid gentrification. She shares these details as a casual recount of her Tuesday activities rather than a boast. You previously aligned your energy with Devin's side of the table. You found that agreeing with his complaints required less effort than explaining your new habit of reading about index funds during lunch breaks. You experience a shift in your focus tonight. You angle your body toward Nicole and ask her a specific question about the property. You listen closely to her detailed response. You register this shift in perspective somewhere between the arrival of the bread basket and the pouring of the second wine bottle. People claim your income will match the average earnings of the 5 individuals you spend the most time around. You lack confirmation on whether this concept stems from a verified statistical study or a popular anecdote. You gather all the proof you need by observing friends discussing money. Devin treats finances as an adversary, while Nicole approaches wealth building as an engaging hobby. You feel this social influence altering your mindset like a change in the weather. You direct your thoughts from Nicole's duplex to a real estate listing you viewed last week. The seller listed the sprawling Belmead property with 4 spacious bedrooms and a deepwater private dock. The seller priced the home at $5.4 million in a quiet waterfront pocket near the famous Miami Islands. You closed that browser tab the moment it loaded because you felt inadequate viewing the massive price tag and wanted to abandon your financial goals entirely. You hold the expensive listing in your mind as pure data tonight. You place Devon's Civic and Nicole's duplex in the same mental space. You view these 3 properties as distinct distances from your current financial starting line. You have no intention of standing up and declaring a dramatic end to your current friendships. You recognize the need for a subtle approach. You stopped mentioning your bookkeeping course to Devon months ago. You brought the topic up during the first month of knowing him, and he pivoted the conversation to his fantasy football draft before you finished your initial sentence. You shared the bookkeeping course details with Nicole last week by chance. She asked 3 follow-up questions and emailed you a relevant podcast episode the following morning. You are observing which friends show genuine interest in your progress. You grip your metal car keys while walking to the paved parking lot after dinner. You consider how easily you could feel inadequate about Nicole's real estate purchase. You create the same psychological trap by comparing yourself to her or envying private jet advertisements and curated social media highlight reels. You measure your progress against your own achievements from last year. You use this personal baseline as the only meaningful metric for your growth. You determine your next actions based on your current position. Standing in the public cereal aisle on Saturday morning, you hold a thick stack of paper coupons. You started keeping a small accordion folder tucked in your bag back in February. Today, you clutch 10 cents off a carton of oat milk and 50 cents off a bag of frozen broccoli you dislike. You built a strict system around this routine. Color-coding every paper slip by expiration date maximizes your efficiency. You feel responsible and adult while completing this process. Adopting this habit aligns your behavior with someone taking their personal finances seriously. You run the math while standing under the bright fluorescent store lights. You save maybe $30 or $40 a month using the folder under the best circumstances. Maintaining this clipping habit for 4 months yielded total savings equal to less than the cost of one nice dinner out at a local restaurant with a friend. You spent all that time clipping tiny papers, sorting them into plastic slots, and remembering to bring the folder to the grocery store every single week. Thinking about Ben Castellano occupies your mind while you stand near the grain bins reading labels. Ben runs a 2-truck landscaping operation located out on the east side of town. He hired you 2 weeks ago through the freelancer board attached to your online bookkeeping course. Ben became your first paying client. You charged him $40 an hour to clean up a QuickBooks file he ignored since March of this year. Ben paid your first invoice in one afternoon. Receiving that direct deposit brought in more money than your entire year of coupon savings. Experiencing a realization right there holding the broccoli coupon changes your perspective. You can only cut your monthly expenses down to a certain point. You hit a mathematical floor with your monthly rent and your weekly gas bill. You spent all your energy straining to shave off dimes while standing on that floor. You face no ceiling on your income potential. Ben could raise your hourly rate to $50 next month. Landing a second client and then a third client after that remains entirely possible. You face no downward pressure on your earning capacity like you do on your daily spending. Sliding the coupon folder back into your canvas bag feels like a victory. You keep the folder because you cling to old habits for a long time even after you outgrow needing them. Tackling a financial task later that night requires your focus. You open your bank savings tool to search for the median household net worth in the country. Avoiding this search for 3 weeks happened because you feared the result. Checking the latest government survey reveals the median number sits at $192,900. You note that the figure increased 37% in real terms over 3 years. Recognizing this as the fastest percentage increase since official record keeping began shifts your mindset. Sitting far below that mark right now feels manageable. You use the number as a concrete target instead of a financial fog. Calculating net worth involves measuring the difference between the assets you own and the debts you owe. You ignore your income, your car, and your lifestyle when making this calculation. Counting Ben's $40 payment sitting in your checking account as a financial asset makes sense. You never gained any asset value from the oat milk coupon regardless of your clipping discipline. Texting Ben back that night confirms your availability for the work. Accepting the second bookkeeping job he mentioned earlier in the week excites you. He needs someone to clean up the financial books for his brother-in-law's local HVAC company. Working more hours on the project than you planned for your schedule seems necessary. Accepting the client work anyway shows your commitment. Understanding that the person clipping coupons in the grocery aisle focused on the wrong side of the financial equation brings clarity. Remaining careful with your daily spending habits stays important. Stopping your belief that carefulness alone will increase your net worth frees you up. Leaving the accordion folder forgotten in the bottom of your bag marks a turning point. Doing the financial math in the daily decisions you make about where to allocate your income when it arrives secures your future. Doing the financial math in the daily decisions you make about where to allocate your income when it arrives secures your future. That calculation interrupts your Tuesday morning coffee routine. Whitney from marketing blocks the break room doorway. She extends her arm at a deliberate angle. The overhead fluorescent tubes bounce off polished gold hardware. A structured orange leather bag hangs from her wrist. She announces the Birkin 30 model like a personal victory. She mentions the Togo leather texture and the current $15,000 retail tag. She bought the piece years ago. You compliment the craftsmanship. Your brain automatically runs the numbers. Whitney shares your exact salary bracket. She holds 2 extra years of seniority. She mentioned last spring that she carries revolving balances on 2 separate credit cards. The leather looks pristine. The 21% annual interest rate compounds on her debt each month. The bank charges that percentage on money she already spent. You keep your mouth shut. You walk back to your workstation. You click a browser tab you saved last week. Ben's second invoice cleared your account, so you finally bookmarked the company retirement portal. You skipped this page 100 times in the past. The screen lists the annual contribution limit for the 401k plan. You can deposit $24,500. The sidebar explains the Roth IRA option. You can add $7,500 to that separate account. The website presents those figures as standard procedure. Nobody ever walked you through the mechanics before today. Those totals once sounded impossible for your tax bracket. Today they read like distant targets. The distance removes the intimidation factor. You picture your grandfather's fitness center on Route 9. He operated that business for 3 decades before signing the sale papers. He kept a painted wooden sign near the free weight rack. The letters told beginners to skip the heaviest barbell on day 1. He repeated that line to nervous 15-year-old boys who wanted to match television bodybuilders. The advice meant nothing to you back then. Your current paycheck changes the context. You open a standard brokerage account. You transfer $50. You select a plain index fund. The fund mirrors the broader market instead of chasing short-term trends. $50 buys 0 designer purses. The orange bag loses resale value the moment Whitney carries it through the store exit. Vehicles and smartphones follow that exact depreciation curve. Manufacturers build those items for display. Your $50 works in the background. The balance compounds while you focus on other tasks. You picture a playground seesaw. One end holds purchases that drain your checking account immediately. Car leases sit on that plank. New phones sit on that plank. Designer accessories with stamped logos sit on that plank. The other end holds investments that generate returns while you rest. You loaded the draining side for your entire adult life. You ignored the generating side completely. You schedule an automatic transfer. $50 leaves your account every other Friday. The timing matches Ben's invoice deposits. You keep the setup private. You skip the break room show and tell. No gold hardware catches the overhead lights. No leather strap demands attention. A digital balance climbs on a fixed calendar. You control the direction now. You apply this math the next Tuesday when Whitney from marketing corners you in the break room near the sputtering coffee machine. She vibrates with excitement and angles her arm to display a new purchase under the harsh overhead lights. The structured bag features buttery orange leather and heavy gold hardware catching the light. She announces the model name, a Birkin 30, treating the words like a personal achievement. She mentions the Togo leather texture and notes the store charges $15,000 today, though she purchased the bag in previous years. You offer the expected compliments because the item looks nice. You run the numbers in your head while you stir your black coffee. Whitney has worked at the company 2 years longer than you and occupies the same base salary bracket. You recall an offhand remark she made last spring about carrying balances on two separate credit cards to cover living expenses. The physical bag sits in front of you, and the credit card company compounds 21% interest every month on money she spent in the past. You keep these calculations to yourself and walk to your desk. You open a browser tab you bookmarked last week after Ben submitted his second invoice. The screen displays the company retirement portal, a dense page full of charts you scrolled past during earlier visits. The maximum contribution limit for your 401k this year sits at $24,500. The site also explains you can contribute an additional $7,500 to a Roth IRA through a separate brokerage account. These large figures belong to people in higher tax brackets. Today they represent a maximum threshold you sit below, which makes you feel capable of reaching the goal. You think about your grandfather and the gym he operated on Route 9 for 3 decades before selling the business. He kept a specific sign near the free weights that read, "Nobody starts on the heaviest bar." He repeated this phrase to every intimidated 15-year-old who walked through the double glass doors hoping to lift like television athletes. The smell of rubber mats and clanking iron made the advice seem abstract at the time. Your current paycheck provides enough breathing room for the practical lesson to click. You avoid dumping your savings into a new brokerage account in one transaction. You fund the account with $50 and select a standard index fund. This boring investment mirrors the broader market instead of attempting clever trading strategies or chasing daily stock tips from internet forums. $50 will not purchase Whitney's orange bag or a fraction of it. Her bag will lose value the moment she walks out of the store and continue depreciating every day afterward. Depreciation applies the same way for cars, smartphones, and any other item companies designed for visual display. Your $50 investment operates under opposite rules. The money compounds and grows during the hours you spend unaware of it. You close the laptop lid and let the initial $50 deposit sit in the market and do its work. Picture your finances as a giant seesaw balancing two distinct sides of your life. One side holds purchases that drain your checking account the moment you take ownership. Monthly car lease payments, new electronics, and luxury bags featuring a famous designer's initials as the actual logo belong on this side. The opposite side holds investments that pull money into your pocket while you sleep. You spent your adult life piling weight onto the draining side without realizing a second side existed. You set up an automatic bank transfer before your brain can invent logical reasons to stop the process. The bank moves $50 every other Friday, aligning perfectly with the days Ben submits his invoices. You keep this new financial habit to yourself and do not mention it to Whitney or another person. You possess no diamond ring to catch the light and no orange bag to parade around the break room. You watch a specific portfolio number climb higher one small increment at a time on a schedule instead of relying on chance. You shift the weight to the correct side of the board. You shift the weight to the correct side of the board. Sign 6 requires you to let persistence beat luck. A Thursday in November arrives nearly 1 year after the night you stared at $214.36. Ben Castellano sends a text from his truck between job sites. His cousin operates a landscaping company 2 counties away. 12 employees work there, and the financial records lack professional oversight since the previous bookkeeper retired. Uncategorized expenses fill the ledgers and receipts sit in shoeboxes. Ben shared your contact information without prior permission. His message reads, "Hope that is okay. Told him you are the real deal." You hold the phone and process the phrase. 11 months prior, your wallet contained expired coupons and you came close to skipping a $40 course. Now a stranger prepares to sign a contract as your fourth client. Outsiders call this luck. They see Ben hiring you, his talkative relative, and your inbox receiving a message at the perfect moment. You know the work behind it because you lived through the previous 11 months. You remember completing course modules at midnight because that hour remained free while the rest of the world slept. You recall the dinner at Bella Vita where you forced yourself to mention the course instead of staying silent while the appetizers arrived. You authorized a $50 withdrawal from your account every other Friday regardless of your motivation level that week. Someone once told you overnight success usually masks 7 years of work. You stand at the 1-year mark, yet the arithmetic makes sense. The version of you who ignored that $40 tab never receives this text from Ben. The version of you who canceled the automatic transfer during month 3 never constructs the reality appearing today. That month, your car required new brakes. The mechanic quoted a price that made $50 feel scarce. You gripped the steering wheel and listened to the grinding noise from the wheel well. You stared at the bank balance and came close to diverting the funds to the repair shop. You came close to becoming that person on a specific Tuesday. You accept the offer from Ben's cousin. You now manage 4 clients and generate tangible income alongside your morning job. The retirement transfer that began at $50 per paycheck sits at a higher figure today. The process remains automatic, boring, and represents the least exciting number in your financial life. This dull figure performs the most labor. It compounds while you sleep and grows while you work the day job. You visit the mall for an errand that weekend and walk past the Rolex counter out of habit. The heavy glass door swings shut behind you. The Submariner date sits under the glass. It features a black dial and a ceramic bezel that catches the light in the same manner as Whitney's bag in the break room 8 months ago. The luminescent markers glow faintly in the dim shop lighting. The retail price sits under $11,000. The salesman mentions a wait list exceeding 1 year. He explains the allocation issues with a polite shrug. The models available for immediate purchase on the secondary market cost near $16,000. You leave the watch in the case. You cannot afford it, yet the realization brings no pain. You calculate the cost against your current metrics without flinching. You understand what $16,000 represents next to your numbers. You know the exact count of automatic Friday transfers and Ben's invoices required to reach that price. The distance is measurable and feels surmountable. The watch transforms from a fantasy into a milestone with a specific cost. You build toward it on the same schedule you maintained since the first $50 transfer. You exit the mall empty-handed. This choice feels like progress rather than defeat. You recall the phone lying face down on the mattress with $214.36 glowing on the screen. That person remains you. You showed up for them on the nights you lacked motivation until the action required no emotion. The specific dollar amount was never the goal. You continue to check your phone at night out of habit. The feeling changed from anxiety to trust. The number changed because you kept doing the boring thing on the boring schedule long after the excitement faded. Tomorrow brings an invoice to chase, a mandatory transfer, and a dinner conversation to choose. None of this becomes easy because you understand it. It becomes your rhythm instead of a rescue mission. Someone else lies face down on a mattress tonight calculating numbers in the dark. They think the math only solves for cash flow. The calculation involves more than money.